Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, before we start, let's take a quick look at the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading margin, forex, and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Alright, before we dive into the charts and trading view, we'll take a quick look at what's on the calendar this week, right? We've got quite a few things going on, but I'd just like to point out that Federal Reserve Chairman Jerome Powell will be delivering his testimony. It's a two-day testimony with the first one on the 9th of July. That's tomorrow, Tuesday, and then the second part will be on the 10th of July, Wednesday. Before that, on Wednesday as well, we've also got the RBNZ or the Reserve Bank of New Zealand announcing its cash rate statement on the 10th of July. And of course, we have US CPI on Thursday as well. Right, hi, morning, Ren. Good to see you once again. Yep, definitely we'll cover the cable as well. We'll just run through the economic calendar, and then we'll start the analysis on the dollar index, and then we'll move on over to cable. All right, so this is the economic calendar from Forex Factory for this week. Take note, I'm on GMT time here. So today, on Monday, we've got nothing lined up, at least no high impact events lined up this on Monday. Tomorrow, we've got Fed Chair Jerome Powell testifying, along with Treasury Secretary Janet Yellen speaking as well. That's going to be at 2 p.m. GMT, Tuesday, 9th of July. And then at 2 a.m. GMT time, Wednesday, 10th of July, the RBNZ is expected to maintain its cash rate at 5.5% once more. And then Powell concludes his testimony on Wednesday at 2 p.m. Right, we've also got a couple of other things going on. We've got UK GDP as well on Thursday, and of course the highly anticipated CPI data on July 11th at 12:30 p.m. GMT. And we've also have PPI data, which is the Producer Price Index. This measures the level of wholesale inflation in the US, and that's out on Friday. Right, quickly taking a look at last Friday's main event, right? We had the BLS employment report that was released, where we saw non-farm payrolls come in higher than its forecast of 191,000. However, this was the only bright spot in this report. If you look at the report in further detail, data on job gains for the months of April and May were actually revised lower. Right, May initially had job gains of 272,000. Now this was revised sharply lower, down to 218,000. While April's job gains of 165,000 were also revised significantly lower, down to 108,000. And at the same time, we saw the unemployment rate edge up higher for the third consecutive month. Right, back in March, it was as low as 3.8%, and since then, it's risen up to 4.1%. So overall, this was a very soft labor report in the US, right? Although, like I said, June's jobs growth of 206,000 came in higher than the forecast. However, this was overshadowed by the significant downward revision in job gains for the months of April and May, while we also saw the unemployment rate edge higher as well. Right, okay, coming back to this week, we have the Reserve Bank of New Zealand going to announce its cash rate statement on Wednesday, 2 a.m. GMT time. So up till now, they've kept the cash rate steady at 5.5% for 7 consecutive meetings. And when you look at headline CPI in New Zealand, it has eased to a 3-year low of 4% in the first quarter of this year. However, it still remains well above the RBNZ's target range of 1 to 3%. Right, and they're also noticing that the main inflation drivers in New Zealand are higher dwelling rents, insurance costs, council estates, as well as domestic services. So despite weaker than expected GDP output, right, inflation still remains elevated in New Zealand, and it remains well above the target range of 1 to 3%. So this is quite likely. This means that it's quite likely the RBNZ will once again maintain its cash rate at 5.5%. However, the statement itself could provide further clues, and if there's any dovish rhetoric in the statement, that could potentially cause the Kiwi to sell off on Wednesday, right? So although there may not be any rate cuts undertaken by the RBNZ, the statement itself could be dovish, and that could cause the Kiwi to lose some steam, and potentially we may see it pull back. All right, and finally moving on to US CPI Consumer Price Index. That's out on Thursday, 12:30 p.m. GMT. Now on the chart, I have the left for core CPI, right? Oops, hang on. Yep, there we go. On the chart, on the left, I have the chart for core CPI, and on the right, I have the chart for headline CPI, both on an annualized basis. So we can see here, since March, core CPI has moderated lower from about 3.8% down to about 3.2% in May. Similarly, after an acceleration in the first quarter of this year, right, headline CPI accelerated from 3.1% to 3.5%. We have now started to see price increases stall and start to expand at a slower rate. So now we're seeing a slight moderation in headline CPI, and the forecast for June points to further easing down to 3.1% year over year. Now, if we get another month of softer than expected inflation data in June, this is quite likely going to cause the dollar to come under pressure, and that means, of course, we may see the dollar index sell off quite strongly come Thursday. Right, now let's move on over to TradingView and start the analysis on the dollar index. All right, we'll start the analysis on the daily time frame first, and then we'll move on down to the 4-hour time frame. Right, as you can see here, after climbing above 106 back at the end of June, in the last week of June, dollar index climbing as high as about 106.13. It has since stalled around this level and reversed to drop very sharply. Right, looking at the weekly time frame, you can see this weekly drop. I think this was almost a 1% drop, and this was the largest decline in the dollar index, I think, since March, right? Since the first week of March in 2024, this is one of the largest weekly declines that we have seen so far. Now, with the dollar under pressure and dollar index sliding lower, right? I see a nice pullback support level at 104, right? We can see here this pullback support level here. The dollar index has bounced off this level several times, 26th of March, 9th of April, as well as making the swing low bounce here as well on the 5th of June. And you can even argue here there's a small bounce here on the 16th of May as well. So this pullback support level at 104 is a key support area, and it's going to be used to identify, and is being identified as the pivot point. So with dollar index reversing today as well, we could see initially it retraced higher. It retraced as high as 105.03 earlier this morning, but it has since reversed to drop lower. So it's quite likely this downtrend is going to resume as the day progresses. And should you have any short dollar index positions, looking at this support zone between 104.30 and 104 is a good support zone to identify your take profit for any short dollar index positions that you may have. Now, we also have a few Fibonacci levels that are aligned close to this support zone, right? We have a Fibonacci retracement at 38.2%. This retracement was found by running this level was found by running a retracement from here, 28th of December, going up to the high here on the 16th of April. We can see the 38.2% Fibonacci retracement aligns pretty well with the support pivot here. And at the same time, we also have a Fibonacci projection here. So we have a 78.6% Fibonacci projection, right? This projection started from 0.1 on 16th of April, going down to 0.2 on the 4th of June, and ending at 0.3 on the 26th of June. We can see that a 78.6% Fibonacci projection also aligns pretty close to the pivot. And finally, we have the 61.8% Fibonacci retracement starting from this swing low on the 8th of March, going up to the swing high here on the 16th of April. Right, we can see the 61.8% retracement aligns very well with the pivot. So we have 3 Fibonacci levels plus a strong pullback support level that helps identify a major support area for the dollar index. So that means should we see dollar index continue to slide lower, it's quite likely going to stabilize around this zone, and this is where a potential take profit level can be identified for any short dollar index trades that you may have. Now, looking a little bit further below, right, we also have a pullback support and a swing low support here at 102.77. And I see a nice pullback support level taking place here on 24th of Jan. You can even see like a bit of resistance here on the 5th of Jan, and we see a nice swing low taking place here in the first week of March as well. So we see a nice overlap level here, at 102.77, which is being used to identify as the first support. Now, this level here also has the presence of a 61.8% Fibonacci retracement, as well as the Fibonacci extension at 161%. This extension level was found by running a retracement from this low on 4th of June, going up to the high here on the 26th of June. So that's how we found this retracement extension level at 161%. And of course, finally, the resistance here is this swing high that has taken place in the last week of June, right? We can see a nice swing high resistance taking place, and naturally this is where the first resistance sits, which is at 106.07. Right. Now let's see, okay, let's put up Ichimoku cloud. So we can see the index is also crossing below the bullish Ichimoku cloud, right, which also would signal a potential change in momentum, right? When the dollar index was trading above the bullish Ichimoku cloud and is green in color, right? It highlights strong bullish momentum. However, when the price does makes a crossover, it starts to trade below the Ichimoku cloud, and the Ichimoku cloud also turns red. This indicates a strong potential bearish momentum inflection point for now. Right. Okay, so these are the key levels on the daily time frame. Now let's zoom on down to the 4-hour time frame. Right, looking at the 4-hour time frame, I think no changes to the first resistance, pivot, and first support. That's fine. I'll probably just highlight an intermediate support level at this pullback level here. Right, this is at 104.27. I'd just like to highlight this as an intermediate support level. And at the same time, I would probably identify another intermediate resistance level, which is a nice overlap here. Right, see a nice overlap level here at 105.43. So I'll highlight this as an intermediate resistance level as well. Right, so these are the key levels, key support and resistance levels for the dollar index on the 4-hour time frame and the daily time frame. All right, now let's move on over to cable. Right, here we go, Ren. Let's start the analysis on the daily time frame. So of course, if dollar index is selling off sharply, we can also expect currency pairs like the cable, euro, Aussie, and Kiwi to be rising as well. Right, we see that now with our cables trading at around 1.2817, and I see a nice multi-swing high resistance at 1.2858. Right, the first swing high resistance took place here on 11th of March, with the second swing high resistance taking place on the 12th of June. Right, so you can see a very strong resistance area for cable, and that's where the pivot has been identified. So this resistance area helps us identify a potential take profit zone for any long trades that we have for this currency pair. So as you can see here, cable found strong support in the last week of June, finding support around 1.2620 before reversing to climb higher. Right, so should you have any long trades for cable, your potential take profit zone can be identified around the pivot level of 1.2858, which is a multi-swing high resistance, as well as having the presence of a 78.6% Fibonacci retracement level as well. This retracement level was found from here, starting from this swing high here on the 14th of July, going down to the swing low here on the 4th of October, both of which are in 2023. And of course, looking a little bit higher, there's a nice swing high resistance, of course, that took place in mid-July 2023, which also has the presence of 100% Fibonacci projection. So this projection level was found starting from here, 0.1, 22nd of April, going up to 0.2, which is on 12th of June, and ending at 0.3, which is on the 27th of June as well. So we can see the 100% Fibonacci projection level aligned pretty close to the swing high resistance that's took place on the 13th of July. So that's how the first resistance has been identified for cable. Now, support is, I see a nice overlap support level at 1.2607, right? Back in the first week of May, second week of May, we saw cable retracing higher, but it ran into resistance here, pulling back before finally breaking higher. And as it makes this swing low bounce here back in the last week of June, it creates a nice overlap support here. So the first support has been identified as an overlap level at 1.2607, which also has the presence of a 50% Fibonacci retracement. Right, this retracement is found by starting from here, from this swing low on 22nd of April, going up to the high here on the 12th of June. We can see that 50% retracement level aligns quite close to where the overlap sits at 1.2607. Right, so once again, Should you have any long positions for cable, right? There's a strong resistance zone at around the pivot, so any take profit level can be identified. A suitable take profit level can be identified around this pivot zone here. All right, let's move on down to the 4-hour time frame and see if there's a need to fine tune the analysis. I think in terms of resistances, the first pivot is fine. I see the strong multi-swing high resistance here. In terms of support, I would probably identify an intermediate support level around here at 1.3745. I see a nice overlap level here, right? We can see cable initially finding support, briefly finding support here on 13th of June, after which it ran into resistance here on the 19th of June and looks to have found support here on the 4th of July as well. So it creates a nice overlap level here, which I like to highlight as an intermediate support level. Right. I think that's yeah, these are the key levels to watch out for cable for today, right? And if with dollar looking weak, we can probably expect this currency pair to rise higher. And if it does come into this pivot zone here, this is a strong resistance zone. So identifying any potential take profit level around here would be a pretty good idea to do so. All right, so this is what we have for cable. Let's move on down over to the euro. Right, once again, we'll start on the daily time frame. The euro actually gapped down today, right? Remember, we had French elections towards the end of last week, and the results are being finalized as we speak. There's more clarity on the outcome of the elections, but generally, uh, it has been, I guess, the least worst outcome in terms of overall results. So that is why, although the euro gapped down, right? Remember, it closed at 1.0840 last Friday, but it gapped down at about 1.0801 this morning, but it's risen quite strongly as results started to come in and we had more clarity on the outcome of the elections. So far it is sort of positive for the euro, and it's also being aided by the fact that the dollar has been selling off as well, right? A weak dollar has also kept the euro elevated, and we could see this currency pair rise up towards its pivot, very similar to cable as well. Now the pivot level at 1.0904 has been identified as a swing high resistance, right? We see a nice swing high resistance taking place here on the 4th of June. And we also have the presence of a 78.6% Fibonacci projection. Now this projection level was found starting from here, 0.1 on 16th of April, going up to 0.2 on the 4th of June, and of course ending at 0.3 on the 26th of June. We can see that at the 78.6% projection level aligns pretty well with the pivot, which is a swing high resistance. And we have also used the 100% Fibonacci projection here. The 100% Fibonacci projection aligns very well with this pullback resistance here on the 11th of Jan and the swing high resistance on 8th of March. And there's also another Fibonacci level, which is the 137% extension level aligning here. So we have a very strong resistance level at 1.0978. So once again, we have a pullback resistance level here taking place in mid-Jan, a swing high resistance taking place in the first week of March, and we have two Fibonacci levels, the 100% projection and the extension at 137% to highlight a very significant resistance zone or barrier here. So that's how the first resistance at 1.0978 has been identified. In terms of support, I see a nice pullback support taking place here on the first May, and then a nice swing low bounce taking place on the 26th of June here as well. So we see a nice support level at 1.0664, and that has been identified as the first support for the euro. All right, now let's zoom on down to the 4-hour time frame. I think in terms of resistances, I would just like to highlight this pullback here. Right, this is pullback resistance level here that has taken place on the 12th of June. I would highlight this as an intermediate resistance level, because if we do see a clean break above 1.0852, that's quite likely going to be a bullish signal for us, right? If we do see the euro clear 1.0852, that's going to be a bullish signal for us, and then we could potentially see it rise up higher, up towards the pivot at 1.0904. In terms of support, identifying an intermediate support level, right? I do see a pretty decent overlap here pretty decent overlap here with the euro making a swing low bounce here on the 30th of May, after which it ran into resistance here briefly in the first week of July as well, and then a little bit of support this morning as well here. So it's a nice overlap support level at 1.0796, and I like to identify that as an intermediate support here. Remember, we do see a nice uptrend for the euro, and if we can clear this resistance at 1.0852, we are quite likely to see further bullish momentum for this currency pair. Right, let's see if there's a ascending trend line. Okay, that's not a pretty decent ascending trend line as well. Maybe just keep this on here on the 4-hour time frame. All right, so these are the key levels for the euro here. If with regards to the pivot, okay, maybe I'll just adjust it a little bit here. I'll use the body of the candle here and adjust the pivot to about 1.0913. Right, we can see the 78.6% Fibonacci projection as well, sitting just above it here. All right, so these are the key levels for the euro. Okay, let's move on down to dollar yen. Right, let's take a look at dollar yen. And okay, we'll start on the daily time frame. And you can see here, the yen has been very weak, right, since end of December and stretching all the way back to January of 2023. And when you look at it on the monthly time frame, right, it's actually the yen has weakened significantly since May of 2021, right? Back then, dollar yen was trading around 108.50, and it has risen very sharply since then. Of course, with strong pullbacks along the way, but nevertheless, you can see the yen weakness being highlighted on the monthly time frame. Now, zooming out a little bit, the yen actually broke through multi-decade swing high resistance at 161. Right, this was a multi-swing high resistance that took place in March of 1990. Of course, with dollar yen trading around 161, coming as high as 162, it has broken above this multi-swing high resistance and was approaching this pullback resistance level here at 164.50. This is also a multi-decade high resistance level, which last occurred in October of 1986. So you can see on the monthly time frame as well, the yen has really weakened quite significantly, causing dollar yen to rise up as high as 162. All right, let's come back down to the daily time frame here. And you can see this level here, this green dotted line, remember, was the previous swing high resistance. So we can use this level here and identify it as an intermediate support level. And I see a strong pivot level here as 158.29 as well. Right, this was the previous pullback resistance that occurred on the end of April. And then a nice little support here before finally going higher. And also, that pullback resistance that occurred in 1986 also aligns very close to the 161% Fibonacci extension level as well. So this extension level was found by running a retracement from here, starting on 29th of April, going down to the 3rd of May. We can see the 161% extension level aligns pretty well with the pullback resistance that occurred back in 1986. And the swing high resistance that occurred in 1990 has been broken and is now acting as a potential support, which we see today as well. We saw it last Friday and today that this level now functions as a potential support area as well. Right, so these are the key levels for the dollar index for dollar yen on the daily time frame. Right, let's move on down to the. Wait, is there a 23%? Let me see if there's a 23%. I don't think. Okay, no, that's not. Okay, now let's just move on down to the 4-hour time frame. You can see here, you can see the overlap very clearly here. This is a very nice overlap support level. If anything, I would like to identify this recent high here that occurred last Wednesday at 161.95 as an intermediate resistance zone as well. So if we do see dollar yen break above this intermediate resistance at 161.95, we're likely to see the dollar yen climb further. So take note, these are the immediate support level at 160.20 and the immediate resistance level at 161.95. If we do see dollar yen break above the intermediate resistance here, that could pave the way for further upside action for this currency pair. Right. Is there anything else I can do? There's probably a retracement I can draw from here. This swing low on the 3rd of May going up to the high of last Wednesday. Let's pull up all the fibs. We can see that a 38.2% Fibonacci retracement aligns very well with the pivot. So let's just keep 38. Right. Okay, so with dollar yen bouncing above here, and also it looks like it's breaking above an intermediate, sorry, a descending trend line. Right, there's a descending trend line as well. So we are seeing a potential breakout above this descending trend line. So we may see dollar yen extend further as well, right? So we see a nice break above the descending trend line, and we could potentially see dollar yen climb higher today. All right, so these are the key levels for dollar yen on the daily and 4-hour time frames. Let's take a look now at the Aussie and the Kiwi, and then we'll start to cover the commodities as well. All right, looking at the Aussie, it has actually broken above previous pullback resistance level. Right, this level at 66.96 was a strong pullback resistance level that was in place since 16th of May. And finally, last Thursday, we saw a nice clean break above this level here. So the momentum for the Aussie is to the upside, and the first major support comes in at 66.96. And we also see there's a nice swing high resistance that has taken place at the end of December. This level at 68.46 is a swing high resistance level that also has the presence of a 78.6% Fibonacci projection. And finally, a little higher, we have a multi-swing high resistance, the first of which took place on 16th of June last year, and then the other one, second one on the 14th of July last year as well. And we can see here these two swing high resistance levels also has the presence of 100% projection level sitting above it here. So this is how the first resistance has been identified along with the pivot, and we could potentially see the Aussie continuing to climb higher here. Although it is looking at a daily time frame, it's pulling back today, but if it does manage to stay above the first support here, we are quite likely to see this bullish momentum continue. Right, now let's look at it on the 4-hour time frame. For our time frame, we can see I'll just adjust the pullback a little bit here, right? You see a nice pullback level here, and very clearly last Friday it found strong support at 107.12, and it does look to be staying above here. So if it does manage to stay above this first support level here, we're quite likely to see it climb at least up towards the pivot at 68.46. So that means this pivot level here, along with the 78.6% Fibonacci projection, is a zone that we can identify as a potential take profit level for any long Aussie positions that we may have. All right, if anything, I'll just fine tune the pivot here a little bit for the 4-hour time frame. There we go. And it aligns with the 78.6% a little bit better now. All right, okay, so these are the key levels for the Aussie here. Okay, now let's take a look at the let's take a look at Kiwi. Of course, since we've got the RBNZ lined up this week, let's take a quick look at the Kiwi and identify the major support and resistance levels. Right, of course, with dollar losing steam last week, of course that's going to cause the Kiwi to rebound strongly as well. It found nice support here at around 60.60 last Tuesday, and it closed at about 61.35 last Friday. It gapped a little bit lower, but managed to rise strongly, hitting a high of 61.53, but looks to be now pulling back once more. Right, first support is very clear. It's a nice overlap level, and we see a nice pullback resistance taking place here on the 9th of April, and of course this nice swing low taking place here on the 2nd of July last Tuesday. Right, so there's a nice overlap support level here at 60.59 that also has the presence of a 50% Fibonacci retracement. This retracement was found by starting from here, this swing low on the 19th of April, going up to the high here on the 12th of June. right? And of course, looking at beyond the pivot here, which is a strong multi-swing high resistance here. This is also multi-swing high resistance here. The first swing high taking place on 22nd of Feb, the second swing high taking place on 8th of March. Then we see like a double top here as well. So this is very clearly a strong resistance area. And we can see the top of the wicks climbing as high as 62.22. So that's how the pivot has been identified, which is a significant resistance level. So should we see the Kiwi continuing to climb higher, then this is a level here, the pivot, that we can use to identify potential take profit zone for any long Kiwi trades. And of course, the further up a little bit higher, I see a nice swing high resistance that's taken place here and end of December last year. There's a very significant swing high resistance that also has the presence of a 127% Fibonacci extension here. This extension level was found starting from this retracement here, from this high on 22nd of Feb, going down to the swing low here on the 19th of April. We can see that the 137% extension aligns pretty close to the swing high resistance that occurred at the end of December last year. Right, now let's look at it on the 4-hour time frame. Right, in terms of intermediate resistances, I think there's actually a nice intermediate resistance level at around 61.67, right? We can see a swing high resistance here taking place on 28th of May, a pullback resistance here occurring on 31st of May, a nice swing low here taking place on 4th of June, and a nice pullback here taking place on the 13th of June as well. So you can see this is quite clearly a pretty significant overlap level, which can be used to be identified as an intermediate resistance here. So that means should we see the Kiwi continue to climb higher, and especially if it breaks above this intermediate resistance at 61.67, we're quite likely to see this bullish momentum push this currency pair higher. Now, in terms of intermediate support levels, I see a pretty decent intermediate support level here at 61.30. Right, so previously this level functioned as a pullback resistance here. This was a pullback resistance on 21st of June. Then again from 24th to 25th as well. And over here as well, functioning as resistance and on 3rd of July before finally breaking higher. So what was previously a pullback resistance level could now potentially function as support. So this is another intermediate support level here at 61.30. So if Kiwi manages to stay above this level here, we are quite likely to see the bullish momentum gain further traction. Right, so these are the key levels for the Kiwi on the 4-hour time frame as well. Okay, with regards to the pivot, yeah, you can see here, I'll try and match the body of the candle. I'll try to match the pivot to the body of the candle. So in this case, I'll just put it up here, and this is a little bit better. Let me just see. There we go. Let's match it to the body of the candle here and pull down the zone as such. All right. So this is here a little bit better here in terms of capturing the main resistance points at around the pivot of 62.11. Alright, these are the key levels for the Kiwi here on the 4-hour time frame. And take note, we've got the RBNZ coming up on Wednesday. And we do not expect a rate cut by them. However, the statement itself could be quite dovish, and that may be enough for the Kiwi to sell off on Wednesday. Alright, now let's take a look at the commodities, starting with gold. So after rising strongly last week, right, we see gold prices gap lower today. It retraced a little bit higher, but then it started to pull back once again, right? So we are seeing sort of positive correlation between the dollar index and gold prices today. Remember, usually gold prices have share an inverse relationship with the dollar. So if dollar is rising, gold prices should be falling, and if dollar is falling, gold prices should be rising. However, we see dollar pulling back today, and now we see gold dropping together along with it as well. So there does seem to be a bit of positive correlation between these two asset classes, so take note of that. The negative correlation looks to be pretty weak as the new trading week gets underway, so just be mindful of that switch in correlation, or that switch in relationship. All right, looking at uh, spot gold prices, which is XAU USD. I see a nice support level at around $2,285 per ounce, and I see a nice resistance level at 2,431, which is close to the all-time high. This level here that occurred on the 20th of May is the all-time high for spot gold prices, and it's also a nice resistance level that's been in place. Well, actually, we see sideways action for gold since 12th of April, right? Since 12th of April till now, gold prices have basically ranged approximately between 2,285 and $2,431 per ounce. So we're seeing a lot of sideways trading here with no real moves, or no real clear moves to the upside or downside, right? As you saw at end of February till 18 April, a very strong bullish move here. However, it's gone into consolidation, sideways trading between these two levels here, which is the first support and the pivot. Right, the first support, not only is it a strong pullback support level here, it also has the presence of a 38.2% Fibonacci retracement. This retracement starts from here, 14th of February, going up to the all-time high on the 20th of May. So it's out of 38.2% retracement level has been found. And the pivot, of course, it's like a multi-swing high resistance that took place on 12th of April and on the 20th of May. Right, and then remember this goal is after making this all-time high here, there's no other level that we can reference from the past to identify a new a potential resistance area. So in situations like this, we have to rely on Fibonacci tools such as projections and extensions. So in this case, we've relied on the Fibonacci extension at 127% to identify the next potential resistance area. So we found this extension level by starting from here, 20th of May, and ending with the low here on the 7th of June, and we're using the 127% Fibonacci extension to identify the first resistance at 2,494.46. Right, okay, now let's look at it on the 4-hour time frame. And you can also see here very clearly that this is indeed sideways action here, nice sideways price action. And in terms of intermediate support, I've just spotted a nice overlap intermediate support level at 2,365. Right, we can see gold prices running the resistance here on 21st of June, running the resistance once again on 3rd of July, and looks to have found support today here. So this, what was previously a pullback resistance level, has now turned into a potential overlap support. So take note, if gold can manage to stay above this intermediate overlap support level here, we are quite likely to see it continuing to rise, at least up towards the pivot. So should it reach the pivot is going to help us identify a potential take profit zone for any long gold trades that we may have. Right, I think there's now we can run a Fibonacci retracement as well. As a retracement, we can start from here. This low on 26th of June going up to the high of last Friday. Let's pull up all the fibs. We can see that the 23.6% retracement sits pretty close to the overlap as well. So let's keep 23.6% and just highlight this as a zone here, which is where gold prices has seemed to have found a support for now. Right, there's one more, I believe, extension that we can run. So to find an extension level, we're going to start a retracement from here. 21st of June going down to the low here on the 26th of June. Right, 21st to 26, and the key extension levels sit at 127 and 161%. So right now we can see prices have indeed stalled at around the 127% extension level, and the next resistance comes in at around 161%. So take note, these are the intermediate resistance levels to be aware of for gold prices for today. Right, so right now there's a nice intermediate support level at 2,365 and an intermediate resistance level at 2,390. Right, so break above either of this level is quite likely going to trigger further movement in that appropriate direction. Right, I think there may be a ascending trend line that we can probably draw as well. It's a pretty decent ascending trend line that we can draw. Right, and this trend line also adds to the significance of the support zone, which is the overlap support at 2,365, as well as the 23% Fibonacci retracement here. Now, of course, if we see a clean break below all these three major support levels, that's going to pave the way for further downside action, and we're likely to see gold prices pull back at least towards 2,320. That's the next support level that I see here in terms of intermediate support. There may even be a fib level here. Maybe it's around 61 and 78.6% here. Probably 61 first. So let's keep 23 and 61. Right, see a nice pullback level here as well. That's been in place since 24th of June all the way till 2nd July. So this is another intermediate support level around the 61.8% Fibonacci retracement here. Take note, so the first major support or intermediate support comes in at this overlap level, the ascending trend line, and the 23.6% Fibonacci retracement. So if gold prices manage to stay above this level here, we may see the bullish momentum drive prices higher, and especially if it breaks above this intermediate resistance at $2,391 per ounce, that could pave the way for further upside action all the way up towards the pivot here at $2,431. All right, okay. Are there any other requests? And if you have any other requests for any other currency pairs or commodities or even indices, do let me know in the chat box. Be more than happy to go through the analysis with you. Otherwise, let's move on over to crude prices. So we'll take a look at XTI USD. XTI USD is the instrument that tracks the WTI crude oil futures, and you can see here crude oil XTI USD, it's suffering its second strong down day as well. Friday, right after hitting as high as $84, almost hitting $85 per barrel, crude prices reversed quite strongly, and that bearish momentum has actually extended today. Right, we saw a clean break below this ascending trend line as well. Right, prices gapped a little bit lower, and the open retraced marginally higher before reversing to resume the downtrend. So we've seen a nice break of what was a previous ascending trend line, triggering a bearish breakout, giving us a bearish breakout signal, and we can see crude prices falling quite sharply today. Now the pivot level here at $81.07 has been identified as a pullback support level. So this is an area where we can target a potential take profit for any short XTI USD positions that we may have. This pullback support level also has the presence of a 38.2% Fibonacci retracement underneath it, and there's another support level at $78 per barrel, which is another pullback support that has taken place on the 13th and 14th of June, which also has the presence of a 61.8% Fibonacci projection slightly below it here. In terms of resistances, we see a pullback resistance that occurred initially first here on 26th of April, and then we can see XTI USD run into resistance twice, 2nd of July, and then again on the 5th of July here. And this pullback resistance level also has the presence of a 78.6% Fibonacci retracement. This retracement was found starting from here, this swing high on the 5th of April, dropping down to this low here on the 4th of June. So you can see here this 78.6% retracement level has been used to identify the first resistance here that occurred on the 2nd of July and the 5th as well, along with the pullback here. Right, so this is where we were expecting crude oil prices to potentially stall, and it has indeed stalled and reversed quite strongly to break through this ascending trend line, triggering a bearish breakout here. Right, okay, now let's take a look at it on the 4-hour time frame. I think no changes to the level. I think what we've identified is pretty relevant. Right, we can see prices continue to fall lower as well. Even in the current 4-hour candle, it is dropping lower. So should you have any short XTI USD positions here, targeting your take profit at around the pivot level would be a suitable area to do so, right? So anything around $81.10 or $81.20 per barrel would be a suitable area to identify your take profit for the short XTI USD trade. All right, so these are the key levels for the XTI USD. All right, I think there's an extension level that we may be able to use. We're going to run a retracement from here, 29th of May down to the low on 4th of June. Let's look at the key extension levels at 127 and 161%. Right, 137 has already been exceeded, But you can see here that how this level would have been used to identify a potential resistance level, which indeed occurred on 28th of June. And the next resistance level comes in at around 161% extension, which is at around $86 per barrel here, which is also aligns pretty well with the pullback resistance here. So the next resistance level up can be identified by this extension level, as well as the pullback resistance that occurred on the 16th of April, as well as on the 19th. But for now, we don't need the 161, so let's just get rid of this extension levels here. All right, so these are the key levels for XTI USD on the 4-hour time frame as well. Let's take a look at US 500. But before we do that, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback with regards to today's analysis, and then we'll continue with the US 500 and the DEX as well. All right, just launched the poll on YouTube, so really appreciate it if you guys can give your feedback with regards to today's live analysis session. All right, now let's move on over to the US 500. Let's start again on the daily time frame here. So you can see here, US equity markets have experienced a strong run up since October of 2023. And of course, we saw a nice pullback here that occurred in April, and we see the uptrend resume once again. Right, so price, this instrument, US 500 tracks the S&P 500 futures, so it's trading close to its all-time high. Right, the all-time high, I believe, was set last Friday at around 5,566.13. Did it make a new all-time high today? Yes, it did. Right, the new all-time high. No, not yet. It has not made a new all-time high just yet. Hi Bob, yeah, having a look at S&P right now. So US 500 is the instrument that tracks the S&P 500 futures. All right, so that's what we are doing right now. Right, so we can see the all-time high here. So if price is trading close to an all-time high, how can we try and identify the next potential resistance levels in scenarios like this? We rely on tools such as Fibonacci extensions and Fibonacci projections. In this example here, or in this context here, we are relying on a Fibonacci projection, which started from here. This swing low that occurred on 27th of October as 0.1, going up to 0.2 on the 1st of April 24, and ending at 0.3, which is on the 19th of April here. So we're using the 61 and 78.6% projection levels to help us identify potential resistances, right? Take note, because price, this instrument is trading close to its all-time high. There's no other level that we can reference from the past, so we have to rely on Fibonacci tools to help us identify potential resistance areas. Right, so that's how the pivot has been identified. So I see a nice ascending trend line as well here. There's a nice ascending trend line as US 500 has bounced off this ascending trend line several times, right? Back here on the 2nd of May, and then again on the 3rd of June as well, and coming close in the first week of July as well. So we have a nice ascending trend line that's supported by this support level here. There's a nice overlap support level here that's taken place at 5,433. So that's how the first support has been identified. And the pivot and resistances have been identified by the projection levels here. Right, now let's look at it on the 4-hour time frame. Right, you can see here, this high that was set last Friday is the all-time intraday all-time high for the US 500, which is at 5,569.28. So of course, it does look like equity markets are going to, US equity markets at least, are going to continue to rise higher. And if we do see this break here, of course, we could see this instrument climb higher towards 5,600 first, of course, and then if the bullish momentum is strong enough, it could potentially reach the 61.8% Fibonacci projection at 5,653. Right. There's also, I believe, on the 4-hour time frame here, we can use a retracement from this high, 28th of June, going down to the low here on the 2nd of July. Let's try and use the extension levels at 127 and 161. We can see that this current all-time high here is also has the presence of a 161% Fibonacci extension level. So let's keep that. Oops, hang on. Right, so you can see here this extension level here also helps us identify a potential resistance area, and if we see a nice clean break above this level here, we are likely to see this instrument rise higher. And at the same time, there's probably another decent ascending trend line that we can identify here as well. And we can see on this uptrend here from the 2nd of July till now, there's a nice uptrend and nice ascending trend line where dollar in US 500 has bounced off this level here last Friday and seems to have bounced off this level earlier today as well. Right, so these are the key levels here for US 500. I also see a nice intermediate overlap level here at 5,520. I would use this level as an intermediate support level, right? We can see resistance here, US 500 running the resistance here on 20th of June and 28th of June, after which it proceeded to function as support from in the first week of July here. So this, what was previously a pullback resistance level, now is potentially going to function as an overlap support. Right, so there's a nice intermediate overlap support level at 5,520.06. All right, thanks everyone for the feedback as well. Truly appreciate it. Right, okay, great to see the response come in as well. All right, okay, so these are the key levels for US 500. Is there anything else that you'd like me to cover? Right, if not, then let's just end the session by taking a quick look at the dollar index once more. Daily time frame again, just to establish the overall key levels here. So you can see here, dollar index retraced a little bit higher, climbing briefly above the level of 105, but it has reversed to drop lower, and the bearish momentum could extend as the day progresses. And I see a nice support level at the pivot of 104, which has several Fibonacci levels as well assigned to it. We have the 78.6% Fibonacci projection, we have the 61.8% retracement, as well as the 38.2% retracement, identifying a significant support zone for dollar index here. All right, and also take note, we've also got quite a few important news releases this week, right? We've got Chairman Jerome Powell, Fed Chair Jerome Powell, testifying on Tuesday, 9th of July, and he concludes his second day of the testimony on the 10th of July. We also have the RBNZ releasing its cash rate statement at 2 a.m. GMT. We've also got UK GDP on Thursday, followed by US CPI data, and of course we have PPI data as well on Friday. All right, thanks everyone for tuning in, and do take note that if we do see another round of softer than expected inflation data out of the US, that's quite likely going to cause the dollar to sell off even further, right? So we take note, we may see a strong potential for bearish catalyst for the US dollar should we see June CPI come in softer than expected. All right, thanks everyone for tuning in to today's session. Hope this has been a great webinar, and do look out for all upcoming webinars for IC markets for the rest of this week, right? We've got a combination of live analysis as well as educational topics that are lined up for the rest of this week. All right, thanks everyone, take care and have a great trading week. Right, most welcome, Bob. Thanks for tuning in, and I truly appreciate when you guys can use the information. Use the analysis and incorporate it as well, because it really helps to form a top view as well. That's why we start the analysis on the daily time frame and then move on down to the 4-hour time frame to identify the significant resistance and support levels, and then try to determine the actual momentum and bias for those currency pairs, indices, as well as the commodities. All right, right. Thanks, Bob. And thanks to everyone else as well for tuning in, and I'll catch you all at the next session.